Hi, and welcome to the next episode of War in the Market. Well, today was another good day for the market with the Nifty up about a little over 1%, mid cap index about 1.5%, small cap 1.65%, and the micro caps 2%. So clearly a very broad based rally. In fact, if you see the Nifty 500, the advanced decline ratio was 2:1, means for every one stock that fell, two rose. So clearly buying across the board. So is that the case? Let's look at it. But first, let's look at the macro setup for today. From a macroeconomic setup, right? The ceasefire is holding. There is talks going to take place tomorrow. Yes, there are a little bit of hitches in terms of Israel continuing to attack Lebanon and Iran saying unless those stop, the talks will not go ahead. I'll not open the Hormuz Strait. So noises are there, but there is still hope in the market that with the American team actually landing in Islamabad tomorrow, that hopefully some solution and that the US might prevail on Israel to support them in this endeavor. And one of the things which is behind the scenes is probably the fact that America would like the war to end and declare a victory of sorts. So whatever they can extract out of this to show Mr. Trump as the victor, they will do, because otherwise the war has been both politically and economically costly for America. Politically, because Trump's ratings have been going down because the gasoline prices are up 35-40% and people are unhappy, and the economic cost because they've been using very expensive missiles and aircraft to put down low-cost drones. So they've asked Congress for a budget of $200 billion to finance. So clearly the war is lasted longer than America expected, and they would like to walk out of it, but they have to persuade Israel. So though the ceasefire is not really an end to the war, there is a hope that the war will end. So that's a macroeconomic. But because of these uncertainties, oil still continues to be high. So that's not a supportive factor for the rally today in terms of 96, 97. Yes, from a $115 level, it has come down, you can say, but pre-war it was at 70, 75. So it's still not come back there. So this 95, 97 oil is still not great for the Indian economy, but compared to the more worse times recently, it's a better situation. So that's the macroeconomic backdrop, and which the currency also plays. The dollar index continues to be strong, but the rupee, thanks to RBI's administrative measures, and probably a little bit, I read somewhere that about $100 billion they had shorted the dollar out of their reserves, and their administrative action in terms of the banks and the NDF market has probably helped. The rupees continues to sustain at a very strong level recently of 92.85. So it's almost a 2% gain in the rupee from a 95 level that it had touched. So that's the overall macroeconomic backdrop. Now, did that mean that FIIs have turned positive? Yes, they have turned positive. Not by much, 685 crores, but still it's a big change from selling 7 to 8,000 crores at the beginning of April. So the clearly, and if you see the breakup of the numbers, they bought and sold around 20 odd thousand crores, and the difference is at 600 crores. So this buying also yesterday was 15,000 crores. Before that it was 7,000 crores. So the buying interest from the FIs is going up, the selling interest of some other FIs is coming down, and they met and turned net positive. So overall, while a 600 crore buying cannot be accounting for the rise in the markets, it's definitely a favorable thing that they are also looking that Indian market, yes, the bad news in terms of the oil price and everything is already in the price. Probably they feel it's oversold and it's time to start entering from a valuation perspective. Still early days to say that, but that's the trend line. What about the DIS? Were they the cause of the big rally today? Not at all, because they did buy only 400 crores. So clearly, and if you see the gross and the net numbers, they also bought and sold 20 odd thousand crores. So what's happening with DIS? A sector rotation is happening, right? They are booking profits in some sectors, and right. Second is that probably generating cash also, because they are not yet wanting to deploy all their money till the earnings season gives them clarity on which sectors and which stocks to buy based on the guidances. So DIS keeping their powder dry and waiting on the sidelines. So then why does the market rise so much, right? So two answers that I was able to glean from that. One is from the technical side and another is from the fundamental side. Let me talk about the technical side. Technical side, if you look at it, there's a futures and there are options. So there's a put call ratio and an index. There's a long short ratio. So if you see, the put call ratio has improved to 1.18 compared to 0.82. So clearly from an oversold territory, it has moved to neutral. So that's a favorable technical move on the option side. And in fact, if you see the resistance support levels, they are very narrow at 24,000 and 24,200. Okay. But on the future side, if you look, it's still a 22 is to 78 long short ratio. So still they are heavily short. Yes, it has slightly improved from 2080 yesterday, but they are still heavily short. But the number of short contracts has come down. You remember I spoke about it being about 2.6 lakh contracts just a few days ago. Now it's only 2.15 lakh contracts which are on the short. I read that they have 4,200, they have short cover. So some degree of short covering has caused this thing. Now, when you come down to the stock level futures, what they have done and all of that, what I was able to glean was that there was sectors which have performed well. Today, auto was the best performer at 2.5%. Bank index was next as 2%, and metals was also positive. Whereas the only sector in the red today was IT, which was down 2%. So looking at this, it's clearly that in these, the heavyweights, they were the ones where the shorts in the market on the individual stocks has probably helped to deliver the result. So FIS, I think, have been short covering in metals. They have been building up longs in banks and auto, and they have been unwinding their longs in IT. This is what I was able to claim and explains these sectoral movements. While on the sector, let me just briefly touch upon the IT sector on the negative, because TCS result on the surface seemed okay. So why did the IT sector correct? Why was there this unwinding of the longs? Well, it looks like the fact is that they've been able to hold their revenue lines, right? But their contracts are coming at much lower profit margins is one. Second is there is no explosive growth, just standard growth. And third, there appears to be another development by Anthropic with a new launch, something starting with M, I don't remember the exact name, right, which has got advanced computing capabilities, which is a further threat to the software industry. So a combination of all of this, plus what I mentioned just a few minutes ago, the rupee strengthening. So earlier, because of the rupee weakening to 95, there was a lot of tailwind, and so I think 5 to 6 days IT sector was running up. Now with RBI actions bringing them down and putting it down, so a little bit of the rupee strengthening means it's negative for IT. So all of this combined as that, we still have to take a call on the sector, we'll probably have to wait for Infosys, Wipro, Tech Mahindra and all the other biggies also to report before we form a view. But today's reaction was negative for these reasons. So I think what I've done so far, I think explains what's happened on the large and the larger mid-cap space. But Nifty 500 actually had a 2:1 advanced decline, which means for every two stocks went up, only one stock went down. And then when you see in the mid-cap space alone, if you take it, the advanced decline was 7.8:1. Which means for every 8 stocks that went up, only one went down. So what this is clearly telling us is that retail participation was very high in terms of buying today. And that was the case even yesterday, if you remember from what we spoke. So this retail participation being very high, what is the reason for that? Well, a number of reasons, I would say, and all these are guesswork, because you can't go and poll the retailers to know why they bought, but they clearly did buy. So one I can surmise is that this whole market's correction, if you see in the Nifty 500, 21% of the stocks, that's about 100 stocks, are down 30% from their highs. So a lot of people feel, oh, there's a lot of correction, so value zone they have come into. HNIs. Second is, I feel that there was some cash waiting to deploy, because March 31st they would have been doing tax harvesting, booking losses to set off against capital gains, and then that money had to come back into the market. Today they felt it was an opportune time with the ceasefire being announced, and ADB also came out with a very strong growth forecast, which was again a good number for us. RBI, if you remember, also reiterated our good growth rates. So all of this, I think, combined has made retail take a positive call today. Right. So in summary, that's the way the market behaved today. And how will it open for Monday? Well, as I said, there are still 2.15 lakh short contracts, right? So short covering can happen if the market opens on a high, then a short covering only can boost it even higher. But for that, we have to wait for the weekend to see the ceasefire news and what is going to do, and track the GIFT Nifty over the weekend before we can do. I'll come and do my weekly review on Sunday or Monday, and probably have a better sense of how the week forward will look. Thank you, and look forward to the next update. Bye-bye.